Good evening, everyone. Welcome to the Buying a Home in the Netherlands webinar. Today's session is starting, it's just 5 minutes after 7 because we want to give everyone the chance to join. Please also note that the session will be recorded and shared, so no need to take notes. We're going to talk a little bit about us, of course, because we like to talk about us, but more importantly, we're going to talk about renting versus buying, the actual buying process, and the FAQ section, which is the biggest section of all the webinars that we have, because we want to make sure it adds value to you. So we were going to talk a little bit more about us. It's always nice to introduce yourself. My name is Kimo. I am the founder of Expat Housing Network, and I always believe that greatness is achieved in the agency of others, and that means that my team, or the team, is actually making sure that we do a great job every day. You'll see Ludo in the screen, and besides that, you'll find people from all over the world supporting. So Giovanna's from Brazil. She's been living here for 12 years, bought several homes now herself, and also for her clients. Ludo, great guy, lived in the US as well, so knows what it's like to live abroad. Alana from Ireland, Dominic, UK, and Philip from Belgium. We, the Expat Housing Network, good to know is that we're not real estate agents or traditional real estate agents. What does that mean? Well, we don't do it for the deal. We do it for the people. We believe that everybody deserves to feel at home. Doesn't matter where you come from, where you earn, where you believe, and we'll try to help you through that process. One other distinction between us and the traditional real estate agents is that we don't support with selling or renting out properties. We help people find a home. That's a big difference. Why is that a big difference? Because currently the market is more a seller's market than a buyer's market, which means that if I am a real estate agent and I have a client that wants to buy and have a client wants to sell, well, guess where my attention will go or gravitate towards naturally, because it's the easier buy, right? Or sell in this case. So they'll move towards the clients that are selling properties. We focus on buying properties, or if you're looking to rent a home, but majority of you will not be looking for renting a home. But if you look to buy a home, that's what we specialize in and focus on. We've become quite efficient in that, and we've got quite a good household name in the market. And we charge a fixed fee. So we don't believe in commissions. We'll get to the actual fee part a little bit later. But why would you pay more if you're already paying more for the house, right? Some agents charge 1-2% for a purchase. We do not. We charge a fixed fee. And the last, well, Ludo can attest to that. We know what it's like to settle in a new country, to move to a new home, set up a new home, find a new home, to go through all those hoops and live with insecurity and need help and so on. So we know what it's like to support you in that and to actually have gone through that process ourselves. Whew, that is enough about us. Then we have a great partner of us, Cesar, who will be sharing a lot more about mortgages and finance today. Maybe Cesar would like to share a little bit more about your team.
Thank you for having me again, Kimo. My name is Cesar. I'm the founder of Mr. Mortgage. Started 2016. Started because almost 50 years ago, my parents came to the Netherlands, and they always had trouble understanding the financial jargon and saving themselves within the financial system. So there's a personal approach to doing what I do, besides obviously loving what I do. I'm not doing this alone. In front of you, you can see our team, our newest team member, Özkan. We call him the Wizard of Oz because he's doing things. We're still wondering how he does it. We have Agla. She's responsible for our marketing. I'm extremely proud of what she's doing. And my partner in crime, Robin, almost been there from the start. Proud of the team. What do we do? We help internationals with personal finance. So we make sure that they can buy a home, they can get the financing, and that everything is in order in time.
Perfect. Thanks, Cesar. Great to have you.
Yes.
Today's goal is to add value to you guys. We believe in sharing information freely. Again, pop your question in the Q&A. We'll try to answer them during the presentation or after the presentation. What we've done in this presentation, because sometimes we hear like, I would have loved to hear a little bit more about that. I would have loved to hear a little bit more about that. And what we try to do is we try to create a presentation that's useful for everyone. And it depends on where you are in the process, right? So we try to create something that's useful for all of you. Of course, we might miss several things, but that's where the Q&A is for. So ask your questions if they're very specific. If we don't get around to them, then you can like book a free intake with us and just ask all the questions that you have there. So before we go on to the further parts of the presentation, there's a little bit of a newsflash, a few things worth mentioning to you guys. The first one is the National Mortgage Guarantee. What is this? A National Mortgage Guarantee protects you if you have an outstanding debt that you're forced to sell your property because something happens to you. So let me give you an example. You buy a property, I'll make it really simple. You buy a property for 100,000, you get a mortgage for 100,000, you pay a little bit off your mortgage, but at some point the house prices drop, and then let's say something happens to your partner or to you. You can't work anymore. You can't pay for your mortgage. That means your house is underwater. Typical Dutch saying. What does that mean? That technically the debt that you have on your mortgage is higher than what you can sell the property for. If you're forced to sell the property because you can't pay your mortgage anymore, then if you're guaranteed by the National Mortgage Guarantee, the National Mortgage Guarantee will cover that difference. But they'll only do it for properties up to a certain amount. And this amount has increased from last year to this year, and the amount is 325,000 euros. Let me specify what that means. So if you buy a property for 350,000 euros, but it's worth 325, it doesn't count. It only refers to properties with a purchase price of 325,000 euros. Yes, so make sure that you don't buy a property that's much more than that, because it doesn't really matter what the value is or how much mortgage you get. This is what they'll look at. It costs a little bit of money, but there's an upside to it. The mortgage rates are a bit better as well when you have this mortgage guarantee. And again, you're protected. So that's the first news flash. The second news flash, Cesar will share a little bit more about that.
Thanks. Transfer tax, property transfer tax, stamp duty, there are different terms for it. When you buy a home, you need to pay the government a certain percentage on the purchase price. A couple of things have changed since this year. Before, if you bought a home, you needed to pay 2% on transfer tax. So I'll give you the example. You buy a home of 400K, 2% is 8K. So that's what you would pay towards transfer tax. What has changed this year, as you can see in the examples, if you buy a home of less than 400K and you're also younger than 35, so 34 or younger, and this is the first time that you want to make use of this tax exemption, then the rate that is being charged is 0%. That's the one on the left. The one in the middle, the example, your partner is 35 or older. So in this example, Kate is 37, John is 33. What does that mean? Usually when you buy a home together, you both are buying and acquiring 50% of that property. So that means that Kate is paying 2% over that 50% and John is paying 0. So in effect, you're paying 1%. The one on the right, you're both younger than 33. One of you already used the tax exemption. Then again, you have this situation where one of you is paying 2% and the other is paying 0%. Perfect.
Yeah. Good to know is that if you want to learn a little bit more, visit the transfer tax checker on their website. There's like a little button on the bottom there. And we'll share this presentation. Just click on it and you'll go, I think, to the Mr. Mortgage website, and then you can actually calculate what it means for you personally. Perfect. Thanks, Cesar. So next poll. We're not going to just answer your questions. We have a few questions for you as well. Again, this will help further down the process. This part of the poll is about knowing or getting to know where you actually are in the process. So again, we'll take a few seconds. I'll try to put on some elevator music, and then feel free to answer some of these, and we'll share the findings as well with you. The first question is, where in the process are you? Did you chat with an agent yet? Did you chat with a mortgage broker yet? Why do we find this important? Well, we'll explain once you filled in the survey. Cool. Oh, people are quick. Thanks a lot for that. Oh, wait, 5 more seconds. 1, 2, 3, 4, and 5. Thank you very much. We share the results. So the majority of you are still researching. So you're kind of like in your orientation phase, which is perfectly clear. And that's what we're here for as well, to share that information to help you make an informed decision. There's a few of you who are actually viewing properties already. Well, I'm happy to see that. And there's actually a few who've made an offer already. Okay, so not a successful offer most likely, or maybe you have made a successful offer and you're curious to know what the actual process is beyond that. The majority of you have not chatted with a real estate agent yet or with an agent, and the majority of you have also not chatted with a mortgage broker. That's great, because otherwise we would be maybe sharing double information. But for those of you who have talked to an agent or a mortgage broker, I'm very curious to learn what you hear tonight that is new for you. So again, pop that stuff in the chat. That's where we kind of like gather the insights to make the next webinars much better than this one. Thanks a lot, guys. Cool. Okay, Cesar, renting versus buying.
Yes. This is weird for me to say since we're mortgage brokers, but so when you want to live somewhere, you need a roof over your head. So you have two options. Either you're going to rent a home or you're going to buy a home. And I'm going to tell you first why you should rent a home. And then I want to see if you're still interested in buying. So renting a home gives you flexibility in the sense that it depends a bit on the contract that you have, obviously, the tenancy agreement, but you can leave the property. And then that's that. You don't have to sell anything. You don't have to wait for a buyer. You don't have to go to a notary to take care of paperwork. It's just leaving the place, taking your stuff, and that's it. You also don't have to pay any taxes, property taxes, and you don't have to deal with maintenance, and there's no down payment required. So those are the benefits of renting. Well, looking at buying or owning a home, indeed, you need to pay taxes. You have the annual taxes, you have the initial taxes, you need to deal with maintenance, and it's harder to move because when you want to move, you need to sell your home, you need to find a buyer, go through all the paperwork. So yeah. So that's renting. Looking at buying a home, why you should buy a home. It gives you stability because you don't have to deal with a landlord. You don't have to deal with any increasing monthly payments. Another benefit of owning a home, the monthly payments for the mortgage, you're building equity. You're partially paying interest and the rest is going towards repaying your debt. So that means that once you sell your home, you've built up equity. And owning a home means that, and getting a mortgage means that you have can use the mortgage interest deduction. Dutch governments wants their citizens to own homes, so they give you a benefit. Downside of renting a home, rents can increase. There are no tax benefits, and you're not creating any wealth. What does it mean? In looking at numbers, we'll show a bit of an example, so you'll have an idea of what it means what it means to build up equity. So on the left side, we see renting a home. Gerard Douwstraat, the asking price, asking rental price is 27,000 per year. So that means that you're paying 27,000 to live in that home for a year. And after that year, 27K is gone. When you look at buying, we looked for a similar property in the same street. Asking price 525. Interest rate is a bit high. Interest rates have dropped. However, looking at monthly payments, 1,832. That's already less than the 2,250 that you're paying. So it is already a benefit. As I mentioned earlier, in the monthly payment, so you're paying 1,832. Of that 1,832, 691 is interest. So that means that you are paying back your debt with 1,100 and a bit every month. The downside of buying is that you need to pay closing fees. Those closing fees that you see over here include property transfer tax of 2%. So 23K, all the fees are included. What we then compare is interest payment is burning money, your rent is the money that you're burning away. That difference is over 1,500. So to earn back those 23K on closing fees that you're spending, it will take you around 15 months. So what we're trying to say in this example, if you live in this home for at least 15 months, you'll earn back the money that you spent. So financially, it does make a lot of sense to do so. Looking at equity, as mentioned, you're repaying your mortgage. If you can borrow up to 100% of the value of the property's value, so 525. After 5 years, you've repaid 71K. When you sell your home, you'll have 71K in your hand.
That's a good amount.
Yep.
Perfect. Session just mentioned something about the closing fees. We'll share a little bit more about that. Transfer tax, of course, if this is applicable for you, you'll pay 2% of the purchase price. What we did is we added another column at the end, which said whether it's tax deductible or not, because some of these costs are tax deductible. The majority of them are costs related to a mortgage, because the government wants to motivate you to get actual specialistic advice and so on. So what they've done is they've said, okay, hey, these amounts that are related to your mortgage, you can actually deduct them from your income at the end of the year, or from your taxable income at the end of the year. So you get some of that money back. Where we're seeing transfer tax, that's the biggest price or the biggest cost that you'll have as well. If it's applicable to you, then we'll have the mortgage deed done by the notary and the transfer deed done by the notary. And please note that the notary's mortgage deed, the cost for that is tax deductible because it's linked to the mortgage. The transfer deed is not. Then you'll have a bank or mortgage broker. They're also tax deductible. You have a typical real estate agent, which charges 1 to 2% of the purchase price, is not tax deductible. We put in brackets there that we charge a fixed fee. The appraiser is tax deductible because it's mandatory from the bank's perspective. Then you have the technical inspector and you have the interpreter, which are not tax deductible. The bank guarantee also is not. Sometimes it's for free with your mortgage provider. Sometimes you pay a little bit for it. And then if you want to actually apply for the NHG, the National Mortgage Guarantee, which we talked about a little bit earlier, then that cost is tax deductible. Who will you meet during the process? We'll share a little bit more about the key players in the process of buying a home, and then we'll go over the actual process, the timeline itself. First, you'll meet Hans, the notary. The notary, if you're buying in Amsterdam, he will draft up the purchase contract. Outside of Amsterdam, the selling agent will do that. So please double, triple, quadruple check if the selling agent will draft the selling of the purchase contract. Please note that the notary is the kind of like the legal kind of like henchman in this whole process. He will make sure that the agreements between you and the bank, you and the seller, are set up. He's an independent party, even though you pay him. He has to be from his professional point of view. The mortgage deed is something that he'll draft up. That's kind of like the final document which makes you the proud owner of the mortgage, and the deed of transfer makes you the proud owner of the property. So this is what he'll draft. Please know that if you're buying in the Amsterdam area, he'll come into play once your offer is accepted. If you buy outside of the Amsterdam area, he'll come into play once the purchase contract is signed. So please be mindful of that. And therefore, sometimes prices can vary a little bit as well. Then you have Michelle, she's the appraiser. Once you have your offer accepted, then you get the appraiser in, not beforehand. Because let's say you get your appraiser in before you submit an offer, you have the value of the property, that's great, but then you submit an offer and you don't get the offer accepted, that's wasted of money, right? So you get the appraiser in after your offer is accepted. Why? Because the bank will say, okay, hey, we need to know what the value of this property is in order to give you the mortgage and the amount of mortgage as well. She'll come into play after the offer is accepted. She'll go to the property, take a few photos, actually come back to the office and, well, do the majority of the work there, and then she'll file the report. but it's not like she's done her job, she's filed a report, she sends it to you, sends it to the bank, and that's it. No, the report has to go through an independent institute called the NWWIY. Well, before 2008, a lot happened, and it was said the appraisers were too much on the hand of the buying agents and the buyers. So they installed an independent institute who validated the reports from the appraisers and said, okay, hey, did you play by the rules? Yes or no? Have you got enough to back up your value? If so, then you're good to go, and they approve it, and then it can be sent to the bank and so on. This whole process from getting the appraiser in to actually getting the appraisal report approved might take 3 to 7 days, business days, take it. Okay, so you've got the mortgage, or so you've got the notary, you've got the appraiser. You also want to do inspections to the property, right? So you have maybe someone that can actually help you, a consultant who goes to the property with you, but a technical inspector with a contractual or with a technical background in construction, maybe she's a contractor or name it, will definitely help, especially if you buy properties that are a little bit older, because they'll be able to spot things that you wouldn't be able to spot. They'll bring some tools to kind of like get some of the, how would you say that? The vulnerable areas and bring them up, right? Because that's what you want. Nobody wants to buy a house and find out 3 to 6 months after they've moved in that they have to redo the roof, or that there's a lot of humidity and suddenly the tiles in the bathroom are falling off. So make sure you do your due diligence. This is probably one of the biggest investments you'll make in a long time. So make sure you do your research properly. Then we have the mortgage advisor. This is Robin. Before we get into the details of what he does, I always like to kind of like compare a bank and a mortgage advisor. This is the following way. So the bank is kind of like your traditional retail shop, right? You go in there and they'll try to sell you the products that are there. It's a very small, tiny retail shop because they only have maybe 3 or 4 products. That's nice, but they'll not give you kind of like objective advice. If you go to a mortgage advisor, mortgage broker, they will be able to share much more with you because they have access to 20, 30, 40 different products, right? From different providers. So they're not your traditional retail shop. They're kind of like your personal shopper, your stylist, name it what you want, right? Look at him, like with the little thing. He looks good, doesn't he? No, but honestly, talk to them, because I think that 1 decimal, 2 decimal differences can make such a big difference, right? Especially if you have a loan that's 3, 4, 5, 6, 700,000 euros. So have a chat with them. What they'll do is they'll not only give you information about what kind of mortgage and what kind of criteria and rates and so on there are, but they'll also help prepare the documentation. And most importantly, they'll help prepare the story towards the bank, because that is probably one of the most important things as well. Especially if you're from a risk country, like making sure that the story is complete and correct will actually help you get your mortgage approved. And the current market is relatively competitive, so you need a good financial specialist besides you. And of course, they'll make sure that the bank delivers on time as well. So that's what the mortgage advisor does. What does the buying consultant do? That's Alana. She's one of my colleagues. What does she do? She will assist you during the process. The key things that she'll do for you is price research, and we'll come to why in a few, property document reviews, and she'll have well, I wouldn't necessarily call it upper hand, but if we offer on properties, selling agents will take our offers more seriously. Why? Because if you compare it to somebody who doesn't have any support, they consider somebody who does have support to be more serious because they have done their due diligence, right? We're not going to submit a crazy offer if it's crazy and it's not realistic, right? Some people will do that and they'll back out. We actually had it, when was it, Monday? We got a call from an agent who said, okay, hey, we initially rejected your offer because we got an offer that was too good to be true, but that party wasn't serious. We're not sure what they're doing. They actually, it's funny, they actually dropped by the house of the sellers, and they wanted to interview the sellers before signing a purchase contract. Well, that's a red flag. That's an alarm. So the selling agent said, no, we're not going to move forward, and they came to us, right? So we might not always have the highest offer, but we might get your offer accepted because, hey, it's a good rep. We'll also, of course, select third parties, notaries, appraisers. We'll connect you with the Mr. Mortgage guys, and we'll review all the legal documents for you as well, whether it's the purchase contract, transfer deed, so on, name it. In this current market, some of you might experience some issues with actually getting viewings because it's so competitive. We will be able to get you those viewings because, hey, again, they'll take a company that's joined by a consultant more seriously than without. Cool. Then the timeline. This is the whole process of buying a home. And it looks very simple. It looks very straightforward. It looks very kind of like neat. But honestly, like this part is a little bit skewed, right? This can take weeks, days, months, depending on what's on the market and if your offer gets accepted. Let's say your first offer gets accepted, right? And you do that within a month because you found something, you sent an offer, congratulations. Well done, well done, well done. We're very curious to see who helped you. Maybe it was us, maybe not. But your offer was accepted. Great, then this is the period where you do your due diligence, right? Before you sign that purchase contract. You get the appraiser in, you get a technical inspector in. Why do you do that? Because once you've signed the purchase contract, well, technically 3 days afterwards, 3 business days afterwards, you are committed to the deal, right? So you want to make sure that you do all your due diligence, you don't have any surprises before you sign that purchase contract. But once you've signed, that's great. The guys can finalize the mortgage application, send it to the bank. Please don't wait until you've signed the purchase contract before you talk to Mr. Mortgage or anyone else, because they can do probably 90% of the prepping beforehand, right? And you want to figure out what you can get, what the status is, and so on and so on. Plus, we work with them as well. So it's kind of like a team effort. So in order to have a higher chance of getting your offers accepted and getting success down the line, it's good to have a team beside you. So they'll be able to finalize the application here though. And then once the cool off period is ended, then technically you're committed. That's 3 days. It can't end on a weekend on a public holiday. And then there's a period of about 4 weeks to get your mortgage approved. Well, I gotta be honest, like these guys can do it much quicker, Mr. Morris, like a week, 2 weeks, no pressure, no pressure. Please bear in mind, no public holidays in between. Summer is always a busy or like a slow period for banks. They all go on holiday. So, but still on average, they can do much quicker. But if you use somebody else, maybe it'll take a little bit longer, 3 to 4 weeks, or if it's a complex case, right? Like it's not always done in a week or in 2 weeks. So please be mindful of that. That's a bit of a dead period, right? Not much happens. You can maybe meet up with the seller, decide if you want to keep the curtains or not. Maybe the seller wants to hand over some other things to you. Maybe you want to agree to certain other things. So that's what you can do there. Of course, prep. Maybe come by with a contractor if you want to do any renovations, measure the place, order your furniture. Honestly, like the time it takes to get that sofa delivered, it's 12 to 16 weeks. It's ridiculous. So make sure you don't wait till the end by doing that. And then your mortgage application is approved. Hooray, well done, Mr. Mortgage, great job. We always knew you could do it. And then you have a period that is up until the moment you get the keys. And about 7 to 10 days before, the notary will send you kind of like a final invoice because, well, you've received a mortgage. The mortgage is not more than the value of the property. And maybe if it's capped at your salary, it can be a little bit lower, but most likely you'll get the value of the property. And then, yeah, anything that you've offered over or that has to be paid in the closing fees, you'll have to pay out of pocket. So the notary will send you a final invoice with that. He'll also send the transfer deed and a mortgage deed, and then you'll sign on the date of transfer. That's where you also get the keys. But before you sign and get the keys, you go to the property to inspect and to see if the property is in a good condition, right? You want to make sure that everything is still the way it is when you last saw it. Sometimes when people move, they break things. Sometimes when people remove things, things suddenly show up, right? Like, for example, yeah, we had a case where a piano was moved and suddenly there was a big hole behind the piano. Like that was a big hole in the wall, right? Then you want to make sure that the seller actually fixes that, because if you once you sign that contract, then yeah, you technically accept the property. But please note though, you still have some time to notify the seller about any kind of like defaults or errors, because technically the seller should disclose everything to you by the last day, by the day of transfer. If he doesn't do that and he is aware of it, then you can hold him liable. The longer you wait with that, the more difficult it becomes to prove, of course. So don't wait for 2 months. A reasonable time is a couple of weeks. 2 months, we put that because it's kind of like the max of the reasonable time. But as soon as you find out within a few days, notify your consultant and the seller as well. Because, well, to give you an example, we had a case where one of the power sockets wasn't working. Of course, you don't check all the power sockets when you move into a property. So we found out one wasn't working. Turned out that electric circuit was kind of like errored. So they needed to replace that. Cost them about 1,500 euros. We said, okay, hey, this is something that the seller should have known. He's lived there for, or he had lived there for about 5 years. So he should have known that, disclosed that, which meant that we could actually hold him liable. They paid, we were happy, and so on. If we would have waited 2 months for that, it would have become a little bit more difficult to prove. So don't wait till the very last end before you share that information. So cool, that was the process. Those were the people you met. That's the reason to sell or to buy and to own a home. Now, we get a lot of questions every webinar. What we try to do is we try to put them in the frequently asked questions. Maybe this is the time to also kind of like put any questions that you didn't get answered a little bit close to the end in the actual Q&A, Ludo will manage this section, and I think there'll be questions from me and Cesar. So Ludo, take it away, senor.
Cool. Thank you very much. Always my favorite part of the Q&A. Make sure that I can talk a little bit. Thanks already for the questions that we've been receiving in the Q&A. I've also been receiving a few questions in the chat. Please put them in the Q&A so that after the presentation we can just find them all in one place, and we'll make sure that we get your question answered. For now, the first question for you, Cesar. Can I get a mortgage with a temporary contract or as a freelancer?
Yes, you can, is the short answer.
Mm-hmm.
I'll start with you having a temporary contract. Your employer needs to fill out a form or a statement, and on that statement, one of the boxes that they need to check is if they're intending on giving you an indefinite contract or not. If that's the case, the banks will look at your income as if you already had an indefinite contract. If your employer doesn't know, or they want to extend your contract with, for example, another year, then it depends a bit on the situation, how much you can borrow. You can still get a mortgage, but maybe the amount that you can borrow is less than expected or wanted. If you want us to check that for you, just let us know, visit our website, schedule a call, and we can inform you about it. As a freelancer, it works a bit different. Banks would like to see what your track record is. You need to have a track record of at least 12 months. The bank will deduct a bit on the income that you had. I'll give you an example. If you had an income of 100K, then the bank will use 75K, so a deduction of 25% to calculate how much you can borrow. If you already have a track record of 2 years, then it's going to be 90%. And if you have a track record of 3 years, that's long enough, and the bank will use 100% of the average income that you had. So you can still get a mortgage. That's a long answer.
Perfect. I'm sorry. So the next question, of course, we go to you, Kimo. It goes as following. What happens if you want to leave the country after several years?
Yeah, we get this question asked a lot, and of course that's natural because the majority of you, well, you're from a different country, you've moved here, you decide to stay and settle, that's great, but how long? That's always a question, of course. Like we often get the story that people decide, yeah, we'll be here for 2 or 3 years, and then turned out they stay for 10, 15, or are still here. So what are the things you can do? The first is you can keep your home and live abroad, but you'll have your mortgage costs, right? It's not ideal unless you want to travel into the country every now and then. The second is you can rent out your home, but you need permission from your bank. Cesar will share a little bit more about that, but please don't easily do this because there are definitely repercussions if you do and the bank finds out. The third one is you can sell your home, and luckily you can sell your home without a penalty or capital gains tax. So without a penalty means you can pay off your home mortgage if you sell your home without any penalties or fines. Capital gain tax means, hey, if you manage to make a little bit of profit on the home, that's great. We're not taxing that in this country. So those are the 3 options. Keep your home, rent out your home, or sell your home.
Alrighty. On to the next. The next is for you, Cesar. How much can I actually borrow from the bank? You're still on mute, Cesar.
Thanks.
There we go.
You can borrow the least of either the property's value or the loan based on your income. I'll give you an example. If based on your income, you can borrow 400K and you buy a home of 500K, then how much you can borrow is based on the property's value, 500K. However, based on your income, you can only borrow 400, so 100K needs to come from your pocket. The other way around, let's say based on your income, you can borrow 2 million. However, you buy a home of 300K, then based on the property, you can only borrow 300K because that's 100% of the property's value.
Okay. All
Clear
right.
as day.
Makes sense. Then always a very good question, very difficult question as well. But where should I buy, Kimo?
Yeah, it's a good question. So because the majority of you are looking at different spots and places, what I'm going to do is I'm just going to highlight some of the things to look out for. Currently, the market is relatively competitive. So if you look at properties in areas that are very popular, you'll find people with a lot of money, and that makes it quite tricky. So what to look out for? Well, there's a couple of things, right? Look out for the properties in the places and in the areas that are not too popular. What does that mean? Then look at the average price per square meter. What normally people do is they look at kind of like budget, right? They say, okay, hey, my budget is 350,000 euros or 450,000 euros, 500,000 euros. They'll look at Funda and then they'll see, okay, hey, this might fit my property. This might fit my budget. But they end up looking in places that are too popular or that are very competitive. Look at price per square meter because that gives you a little bit of an indication, okay, is there still room to move? The other thing is look at, of course, the quality of living because that's mostly the important thing, right? Because most of you will buy a property and you live in it for a foreseeable time. Let's say you might have to live in a little bit longer because the market dips a little bit. Then you want to have a property where you feel comfortable in. I'm going to give you a personal story. 5 years ago already, I bought my first home and technically my only home. And the reason why I bought was because my partner was pregnant. We lived on the 3rd floor in the city, and we were like, we're not going to carry up the kid and all those groceries and the stroller up the stairs. Plus, the stairs were kind of like the lethal ones, right? Like, you know, they went up the black ski piece, like it was terrible. So we decided to buy, but initially we thought, you know what? Because we'll move to another country. She was working for an international company. I was always curious to move to another country, and we initially started looking for properties that were like 50 square meters, 55 square meters, because we thought that was easy to rent out. We were very lucky that we didn't get any offers accepted back then, because if we had, we would have been still here and we would have been in this small property. We ended up buying a property that was a little bit bigger because, hey, we decided to up our budget. And the first property that came on the market that we saw that was a little bit bigger, about 80 square meters, we're like, yes, let's go for that one. We went for it and we're super happy now. If we would have made the other decision, we wouldn't have been. If I look back at the decision we made for the 80,000 or the 80 square meter property, I think I maybe would have looked a little bit further and said, okay, hey, we're getting a kid. I would maybe like to have a little garden, right? So look at what gives you kind of like quality of life in your property, especially currently with the whole COVID lockdown and people being working from home. That's not going to suddenly change. Maybe it's going to be a hybrid model where you actually work a little bit in the office and work from home the majority of your time. Consider what makes you happy from a house. Is it space? Is it an extra room? Is it facilities, amenities? Because in the end, you'll have to live in it. So that's probably the most important thing. Then, of course, look where the areas of development are, right? I just mentioned the price per square meter, but also look at where are they currently building? What are the plans for those areas? Is there a good connection from public transport and so on? To give an example, what's the best example? Well, I think the majority of you are looking to buy in Amsterdam. So let me give an Amsterdam example. Amsterdam North, they were constructing a metro or a subway, right? So that suddenly connected the north of the city to the rest of the city. Well, that gave a boost to a lot of these areas close to that metro line. That's something you can look into. But also, how much time does it take to travel to work? Because even though people might be working from home a lot, they still don't want to travel for like an hour and a half, 2 hours to get to work, right? So have a look at that. And well, one maybe a bit of a strange tip is that what we see and what we saw is where the creatives are, where the creative industry is, that's where kind of like the rest goes in the future. So have a look at that as well. And of course, have a look at the amenities and facilities in the neighborhood, in the city. Like, is there a park nearby? Are there a lot of shops nearby and stuff like that? Because that attracts people too. Those are a few things to look out for where to buy. First of all, quality of living. Second of all, areas of development. Third of all, is it a good location to reach and so on, and amenities and such and such. And the last one, creative, but that's kind of like a tricky tip. So there's a few tips to buy a home.
Cool, thank you, very informative. Then we'll move back to you, Cesar. Is it actually possible to rent out my property or part of my property? Cesar, you're on mute.
Got it. Sorry.
Thank you.
Yes, you can. You can rent out your house. You can rent out your room. Only thing is, you need approval from the bank. The thing is, 9 out of 10 banks, when you get a mortgage, they don't have an option to rent out your home, unless there is one loophole. Let's say your employer is sending you abroad for a big project for 2 years, and after those 2 years you return. Then the bank will allow you to rent out your entire home or apartment. If that's not the case, and you simply want to, for example, move to a new home and want to keep the current one, then what you should do is refinance the current mortgage. Refinancing means going to another bank, getting another loan or getting another mortgage, so you can pay back the mortgage that you have. And with that new bank that offers a buy-to-let mortgage, you are allowed to rent out your home. Renting out a room is always possible, as long as you inform your bank and as long as your roommate signs a letter that the bank will share with you. So yeah.
Okay, perfect, cool. Then we've been hearing a lot about overbidding and what is the right amount, what is the right percentage. Can you explain a little bit about that, Kimo? What is the typical amount I should overbid?
Yes, I'll try to do that. I'll try not to get emotional as well, because every day I'm reading stuff in the news and it says, or tells a story about Adam and Eve, and they had to overbid by this amount from the asking price. And this is fault number one, because what happens, and the media takes this over, and I don't know why, because technically we have three different things. One is we have the asking price. The second is we have the value of the property. And the third thing is we have the amount that you should bid. What you see and what you read and what you hear is people saying, oh, I had to overbid by 10%. And then they use the asking price as the reference. That doesn't make sense, because the asking price is what? The asking price is an indication of how opportunistic the selling agent is, right? Let me give an example. So we have selling agent A and selling agent B. Selling agent A helps a client. They have the exact same property, and he helps a client, and he says, you know what, I want to impress my client. So I know the value of this property is 300,000 euros, but I want to impress the client, and I want to say, okay, hey, let's offer it on the market for 260,000 euros. And then he gets an offer for 310,000 euros. Wow, look at that. I got, what was it, 50,000 euros over? That's great. He impresses the seller. He also gets a lot of people into the property, because, hey, the lower the price, the more achievable it is for the majority of the people. And then people say, okay, hey, I had to offer about 20% over the asking price to get the property. But technically, the value of that property is 300,000 euros. And you're paying technically 10,000 euros more than the actual value. Or if you're actually buying the place for 300,000 euros, you're paying for the actual value. Then we have agent B, and he says, you know what? I want a specific type of buyer. I'm not going to put it up for too much below the market value. And I believe that with the current kind of like idea in the market, I can get a little bit more if I have it closer to the actual value of the property. So he puts it up for 290,000 euros, and he gets 325,000 euros for the property. He's done a better job. Why? Because he's put it up for what? Close to the market value. He's got a little bit more money out of it. So he's maybe less opportunistic, but received more. And then suddenly you have 290 and 325. Okay, the market value here is still 300,000. So somebody actually went over a crazy amount, because he heard that he had to offer a lot over the actual asking price. But technically, the actual asking price was very close to the market value. And this is very important, because Cesar just mentioned that the bank will not give you more than the market value, right? So anything that you overbid comes out of your own pocket. And if you suddenly look at a property and you say, I have to overbid by 10 or 20%, then that's no indication of what the value of the property is, what the mortgages that you'll get, and what you'll actually end up spending out of pocket. So don't look too much at the asking price. You can use it as a reference to search for properties for, right? Because if your mortgage cap is 400,000 euros, don't search for properties for 400,000 euros, because the majority of the agents will put the property up for a little bit below the market value. Some will put it up for a lot below the market value. It depends on how opportunistic they are, right? So have a look at the actual market value. And then if people then ask us, okay, hey, what do we have to overbid typically? Then I say, it really depends. Because if I say 10% and the agent is actually asking market value, then I'm not going to tell you to offer 10% over. That would be ridiculous, especially if you don't have that money in cash, right? So don't look at the asking price, look at the market value. And this is where we can support with. The land registry has an open registry. It's a little bit of a puzzle to get that data. There's some other sources as well, but have a look at the market value. Don't look at the asking price, and don't ask what should I typically overbid, because once you start doing that, and we had a case the other day where we defined the market value and somebody went over by a crazy amount, and we were like, it's not worth that by far. So if that person is happy with that property for that much money, that's great. But by the time they've recouped or have kind of like broken even or anything like that, they'll be, well, I wouldn't say in their 50s, but in their 40s, right? Yeah, have a look at the market value. And oh, I did get heated up a little bit there, but yeah, that's my that's my answer. Next question.
Next question, a little bit of a less heated topic. For you, Cesar, what happens if I leave my job after I secure the mortgage?
Actually, nothing. I'll give you a story about what I did. I was working for ABN AMRO, one of the big banks in the Netherlands. Bought my first apartment, and then I decided to start Mr. Mortgage. I could keep on paying the mortgage, so yeah, nothing happened. As long as you can pay the mortgage, obviously you're not going to work at the same employer for 30 years because you have to pay your mortgage for 30 years. So yeah, nothing happens.
Well, something happens. We got you, Cesar.
Yeah, but that's yeah. So
that's a good thing.
Thanks.
All right. Well, then we'll stick with you for now, Cesar.
Yeah.
Following question: what is the 10% deposit that I need to complete, and is it something that we always have to do?
Yeah. Could you? Yeah. Thanks. So we see this timeline. So once you sign a purchase agreement, that's over there. Yes, thank you. One of the things that you're discussing, and that is something that Kimo or his team is going to help you with, is that we don't have something like a pre-approval in the Netherlands. So you need to have time. You need to have the time to get a mortgage approved. As Kimo mentioned, we can do it a bit faster, but let's say you'll get a deadline of 4 weeks to get your mortgage approved. It means that during those 4 weeks, the seller has zero security because the seller doesn't know you. They don't know if you have a job. They don't know if you have money. They don't know anything, and they cannot sell the property to someone else because they have a contract with you. If they want to sell it to someone else, you can claim 10% of the purchase price or the selling price from them. So they won't easily cancel the agreement that they have with you. So 4 weeks is what you have. That is your security. What the seller will ask you to do is 1 week after, and that's usually 1 week after the mortgage, the deadline of the mortgage approval, they want to have security as well. How they want to have that security, and this is standard in the Netherlands, is either you transfer 10% of the purchase price to the notary on an escrow account, so that when you cancel the agreement with the seller, that they can get that 10% paid to them, or you can get a bank guarantee. And the bank guarantee is something that we can arrange for you through the bank that you're applying for the mortgage. So I hope that explains the 10% that you can hear during the process.
I think so. All right, then a question we get asked a lot, especially well, the last couple of months, of course. A question maybe that both of you can answer. I'll start with you, Kimo. What impact does COVID-19 have on the housing market?
Good question. And I'll leave the mortgage part and the interest part to Cesar. I'll share a little bit about what has happened already and what I expect to happen. By the way, if you would have asked me this question about a year ago, a little bit longer than a year ago, then I would have been very somber. Somber is a is a down word in the Netherlands, because there wasn't anything by the government to support. So I thought, okay, hey, the market's going to have a big hit. Luckily, things worked out really well because the government offers support. Plus, because people were spending so much time at home, suddenly the home became more important than ever. You've experienced it. That's maybe one of the reasons why you're here. Because if you have a property with 1 bedroom and you're both working from home, let's say you even have a little one, right? You're both working from home, then at some point you might go crazy. You might want to have that extra room, or you might want to have that little bit of extra space. So the home became more important than ever. After the initial shock kind of like disappeared, we saw people starting to flock towards the housing market. But there's a few trends that we saw. We saw dispersion. So suddenly it actually went out of the city to the more rural areas, because that's where the space was, that's where the green was. Now that things are opening back up again, we're seeing it's kind of like floods, right? So the tides go out, the tides go in again. So now we're seeing people go back to the city a little bit again. If it's going to be the same number of people looking to buy in the city, well, currently it's relatively competitive, but who knows what the future will bring. I do believe it's going to be a hybrid model. So I think that the rural areas will remain more important than they were before COVID. So after the initial shock, people started to buy homes, started to invest in homes, started to look for homes, and so on. What's going to happen in the near future? I don't foresee the market having any impact in a negative way in the next year, and most likely the next 2 years. Believe me, I don't have a glass ball. I am not a foreseer. I believe that looking at what we're seeing now, there's a lot of people wanting to buy a home. And if there's one thing that the Dutch do really good, it's being very slow at building new homes. So the amount of homes that come available is not enough to reach the kind of like demand level, and rental prices keep increasing as well, because a lot of people can't buy a home, they'll move to a rental. So that's a combination, well, a combination with interest rates, as we'll share a little bit more about that. But that's kind of like this strange liquid that creates a lot of interesting demand on the housing market, which means that the price will continue to go up for at least a year, maybe 2 years. At some point, the governments will have to wind down the government support. What's going to happen then? They're talking about these zombie companies. I'm not sure if that's the case. If the market goes back up again, opens back up again, the world normalizes. I know that the amount of money that the Dutchies have saved has increased by a lot. I think some other countries have as well. So there might be a spending spree, maybe the roaring 20s. Who knows? I'm looking forward to that, by the way. But who knows, right? But at some point, there will be kind of like a bill to pay, whether it's this generation or the next generation that does that. I hope it's none. I hope it's neither. I hope we'll find a way to kind of like make sure that this is kind of like evened out across the globe. But at some point, there will be some kind of correction. What correction? I think it's going to be a relatively small correction on the housing market, because it's much more healthy than it was 10 years ago, 15 years ago, 2008, 13 years ago. Where back then people were having all these mortgages, but they were able to actually borrow more than the value of the property, 106, 110% more than the actual value. What that meant is they were spending things on boats, on houses, on kitchens, on things that didn't have a steady value. And then suddenly when the housing prices dropped, they had these big gaps between what they had to pay back and what the value of the house was. That had an impact on the housing market, and suddenly, well, that created a big dip. We don't foresee that at this moment, because you can only borrow up to 100%. A lot of the savings are going into the houses though, but that doesn't necessarily have a negative impact once you've actually get a little bit of a dip, especially the longer we wait, because you'll pay off your mortgage on an annual basis. So even if we get a little bit of a dip, you might be able to take that hit. So I don't foresee a big dip, but I do foresee a little bit of a dip when maybe 2-3 years from now, the first year, the next year are going to be just fine. But again, I'm not a financial specialist. I am not an econometrist. I am not a magician. If I would be, I would probably be doing tricks somewhere else. So that's my 2 cents. Maybe Sergio, you'd like to share a little bit more about the mortgages.
Sure. I am a bit disappointed though that you're not telling us where we should buy, and now you're not telling us what's going to happen in the future. No.
Who's asking these questions?
Yeah, I'm putting them in the chat.
Yeah.
No, so I'll also start with what happened in March, April last year. So at first, and because nobody knew what was going to happen or what the impact could be, what we saw was that interest rates immediately went up. So we had, to give an example, we had interest rates of 1.5% fixed for 10 years. Then COVID-19 happened, and what we saw was interest rates went up to 1.8, 1.9, and banks got a lot more strict on which mortgages they accept. Their due diligence was and still is more difficult and more challenging than it was, because we still need to answer a lot of questions, and we really need to sell your case to banks, especially when it comes to long-term income. I'll give you a short example. If your employer was in the news because they were letting people go, then we're going to get a lot of questions about that, and what the impact is on your position, and what the impact is on the future of the company, etc. So that is April, May. What we saw, central banks were helping out economies. They still are. They have been doing so, but increased their efforts. And what we saw happening, because also government is supporting companies, it had zero impact on the housing market, and the only way was up, and still is up. I cannot predict what's going to happen in the future. For me, the question when you want to buy a home is simple. How much are you spending on rent, and how much are you going to spend on a mortgage? And if buying is more beneficial, then you buy. If renting is more beneficial, then you rent. It's as easy as that. Because trying to time the market or trying to find the right investment could be a waste of time if you decide on buying a home. Again, don't know what the future will bring, but yeah, that's basically it. I don't foresee it, by the way. I'm positive all the way.
Your comment also triggered me. Timing the market is very, very difficult, and I think that, I'm not sure who said, I think it was Warren Buffett. He said it's not about timing the market, it's about time in the market. So nice. When you buy a property, and buy it for a foreseeable future, right? So for at least 5 years, something like that, because it's very difficult to say what's going to happen when you look 1 or 2, 3 years in the future. But luckily, me and Cesar are not seeing any dips, so that's a good thing.
All right, then, and a very important question as well, of course. If people, which of course they're going to, start working with us, can you both share the fees, please? Let's start with Kimo in this case again.
Yeah. So we offer 2 different type of packages. One is kind of like a remote package where we support you throughout the way, but we only come into action once you view the property and you love it. We will help with the price research, property document review, submitting the offer, negotiate, submitting or requesting third parties, reviewing all the legal documents, purchase contracts, and making sure you're ready throughout the process. For that package, we charge 2,000 euros. And then we have a package where we can like hold your hand. When you see your property on fund that's shared with us, we'll actually book in the viewing, and then we'll go there with you. We'll do all the research, and we'll be there at the appointment. So the technical inspection, all the other appointments, and we'll make sure that this process is seamless and is pleasant. And we always have this secret slogan where we say, if we don't get invited to your housewarming party, we didn't do a good job. What does that mean? If you didn't throw a housewarming party, or if you do throw a housewarming party, you're most likely quite proud of the property and you want to celebrate that. If you want to invite us to the celebration, that means that we managed to build up a relationship. So we've been pleasant throughout the way. So we've been successful and pleasant. That's probably the key goal. For the last package, we charge 4,800 euros. That's all including taxes and such. Yeah, so that's those are the fees.
We work with one fixed and flat fee, and we also don't have any additional fees, no hidden fees. It's just one fee, so there are no surprises. It's as transparent as that. Our fee is 3,250 euros. What do you get? We are advising on your mortgage, obviously the right rates, the right bank, the right type of mortgage. Besides that, we also look into what happens, and these are less fun topics usually, but what happens if you or one of you passes away? What does that mean from a financial perspective? What happens from a financial perspective if one of you loses their job, gets disabled, for example? What does your retirement look like? What do you want it to look like? So we advise you on all of these topics. We also provide the solutions. So we make sure that we broker the products for you. So the mortgage, once you give us a green light on our proposal, we make sure that the mortgage gets approved. Same goes for life insurance, disability insurance, unemployment insurance. So yeah, 3,250. And most important thing, our fee is tax deductible. So depending on the income tax bracket that you're in, you can deduct our fee. So you'll get back usually around 40%.
Perfect, cool, good to know. Thank you very much for sharing.
Perfect. I think that that was the final question. So we'd love to get your thoughts on this webinar. So we have 2 or 3 final questions to ask you. Please fill them in if you want, not mandatory. So, but this will actually help us shape the next presentation. So your feedback is important. What did you think, or how likely would you refer this webinar to a friend or a colleague? And did you miss anything in this webinar? And what would you like to get more information on? One of the things that I'm always curious, especially if we, oh, we're scoring pretty well. That's very nice to hear. I'm super pumped to see that we're scoring 8+, so that's great. If anyone thinks that there's something specific, very specific, or if you score as a 7 or lower, please let us know why and what we could have done to better. Please pop it in the chat. Again, we're trying to learn from every situation. If you think that some things were missed in the process or in the webinar, please let us know. There's a few people who thought about that, who thought that. So please do let us know what you've missed. Pop it in the chat. We'll review that and we'll see if we can actually add it into FAQs or in the process next time. What would you like to get more information on? We're always curious to hear that. Again, please feel free to book in a free intake with us. Like, we're available, happy to answer the questions that you have, free of charge, no strings attached. We're going to go to your questions. Thanks a lot for filling this in. I'm going to quickly share the results. Happy that the majority of us have scored as a 10, 9, or 8. Great job there. My parents would be very proud to see these report numbers come back in. Great, perfect. Ludo, take the Q&A away.
Thank you very much. Cool. All right. I'm just going to start on the top of the list. If you do have any other questions, again, please put them in the Q&A. We'll make sure to answer all of them. First question is from Michael. I'm going to ask this question to you, Cesar. The question is regarding transfer tax. He goes, if I own an apartment in my home country, do I still qualify for the 0% transfer tax? And does it matter if I bought it or, for example, inherited the property?
The latter doesn't matter at all.
Okay.
So how the tax exemption works is, have you used it in the Netherlands? So even if you have 10, 20 properties abroad, so outside of the Netherlands, I mean by that, and you're buying a home in the Netherlands, you are younger than 35, and you want to make use of the tax exemption for the first time, then you can.
Okay. All right, perfect. Then I'm moving on to you, Kimo. Question from Tim. How detailed is the technical inspection actually? Quality of the framing, water damage, insects, etc. And is the inspector then legally liable if they miss something important?
So good to know is that the inspection is a visual inspection. So they'll come into the house and they'll inspect using their eyes. They're not going to tear down walls, not going to open up things. So they'll do it visually. They'll bring some tools, like for example, humidity measure to measure the humidity behind the walls. Sometimes they bring kind of like a laser beam to see if the floor is level and so on. But the majority of the things they'll do using their eyes. So they'll see, look at the cracks, they'll look at the quality condition of things, they'll check the crawling space if there is one. And they're liable to some extent, of course, if it was a very apparent error that was in the property that they've missed, then they're technically liable for that. The report will share and show everything that they've disclosed and that they've seen, and it'll also have a chapter where they say, okay, this is what we expect it to cost if you were to fix this. This is what you need to fix the next year. This is what you need to fix the next 3 years, and then 5 years plus, and whether it's your responsibility or not. So it's relatively detailed. I think that it's just useful to have a second pair of eyes looking at the property. If you're not using a consultant, if you are, then you already have that second pair of eyes. But to have a specialist come in, they'll be able to actually use their experience to look at it. If you, of course, have a lot of experience with construction yourself, you can do it yourself. But please bear in mind that Dutch properties, Dutch houses, especially canal houses and so on, and old age houses can be tricky. It also offers you another moment to actually view the property again and learn about the property through somebody's eyes. So no, I would definitely advise it. The detailed level is pretty good, but they'll share everything with you during the inspection as well. So you can ask some questions and so on. So it's quite useful.
Okay. All right, perfect. Cool. Then back to you, Cesar. A question from, I think, Charles. Please excuse my pronunciation, by the way. I'm not the best at it. We have people from all over the world, so. Charles, here we go. Is there any specific advantage for those who have 30% ruling?
I think the question obviously is towards financial products.
I think so, yeah.
No, what you do see, you could borrow slightly more if you have the 30% ruling. Since the duration of 30% ruling has changed from 8 to 5 years, the difference is usually not that big, how much you can borrow extra, I mean. So that's one. The thing that does help, so having the 30% ruling means that you came to the Netherlands as a highly skilled migrant. And what we see is that some banks have a special policy towards clients that have the let's say status of being a highly skilled migrant, because obviously they believe that if you would lose your job, then you could find another job easily. So that makes the bank feel more safe. So in that sense, it does help you. So it's borrowing slightly more than without, but it helps to sell your case better than without having that 30% ruling. Okay.
All right, cool. Then a question regarding appraisals. A question for you, Kimo. If the appraisal can only be done after the offer is accepted, where or from who do we get guidance on what kind of offer we should make in the first place?
That's a good question. There's a company called Expat Housing Network. Now, we can actually support you with that. So what we do is we do price research. What we do is we look at properties sold in the last 6 to 12 months that are similar. There are several other conditions to look for when you compare a property. What we do is we list those properties. We're completely transparent, so we'll share that information with you so you can see how we can deduce the market value based on the properties that have been sold. Based on that, we can advise you, this is what the range will be on the valuation, right? We're never going to give you like an exact amount, so this is the exact amount, because if you send 3 appraisers to one property, they're definitely going to come back with 3 different reports and 3 different values. The range will be maybe 5 to 10%, but either way, we're going to give you a range, and then based on that, we're going to have a discussion about the property and what to offer on it. Because if it's a newly built, very high-end property, or let's just focus on the high-end part. Let's say it's high-end, is really well decorated, then most likely you'll be in a competitive bracket, right? You'll be in a competitive, well, property environment. If it's a property that is maybe a little bit of a fixer-upper, then it might give you a little more room. Also, the emotional attachment that you have to the property. Let's say you love the property and you're willing to put a little more up to actually get it, or you're very far in the process. You've already submitted 5 offers, and after 5th offer, you're like, let's go to EHN and let's ask for help. Then maybe you're willing to spend a little bit more. Or if you're very cautious because you're like, hey, I don't have a lot of cash myself, I really have to get close to the market value, then we have a conversation about that. In the end, we can only advise. In the end, you are the person that is kind of like deciding what you want to offer. We can only advise to what a competitive offer is. It's not just the ask, it's not just the purchase price, it's also the other conditions that play into it. So there's a combination of things. So we'll help with that. If you want to do it yourself, you can actually go to the land registry, double check prices there. But doing the work, well, if you have the time, it's not rocket science. We just need to figure out where you want to find it and what you want to find, and how to compare it and how to index based on time and price and stuff like that. So there's a little bit more to it, but yeah.
Okay.
Hope that answers your question a little bit.
So you said something regarding Expat Housing Network. Do you have, by any chance, a PowerPoint slide that you could show us with all the contact details?
I think we might. The contact details are here. But if you wanna book a free intake, then feel free to. Where is it? Via the website, or click on the link in the chat. Or we can maybe post the links in the chat. I'm not sure if we have links to the intakes. I think we do. Maybe Ludo, when you ask a question and we answer it, maybe you can pop it in the chat.
Sure thing.
Otherwise, I'll have a look at it as well. Otherwise, go to the website or click on the logos below once you've received the presentation.
Cool. All right. Then a question from an anonymous attendee. A question for you, Cesar. If my salary doesn't match the mortgage that I'm looking for, is it wise to pay the difference in cash?
It depends. Why am I saying it depends? It depends a bit on what else you want to do with that money. Do you need that money in the future? So what are your future goals? What are your future plans? So we would need to have a discussion about that.
Okay, cool. Yeah, those depends on specific situations.
Yeah.
Then a question for you, Kimo. A question from Natalia. If I'm interested in buying the house I currently rent, is it a good idea to inform the landlord, or is it better to wait and see if they are interested to sell at some point?
So if you wait, you might wait for a very long time. I would grab the bull by the horns and inform them that you're keen to purchase it. Maybe do your research beforehand, right? Because they might not have done their research. And then if you say, hey, I'm interested, this is what we're willing to offer on it, you can maybe start a negotiation. You can take the lead on that. If you don't do that, then they might take the lead on it, and then suddenly you end up paying maybe more than you want to pay or have to pay. So think about it. Do the research first. We're happy to support you with that. We actually bought a property last year for a girl who was living in it and renting in it. The seller wasn't aware that she wanted to sell until we contacted her, and we're actually able to get it for a good price, including the attic. So definitely a good setup. because you know what the property is like, you know where you're buying into, and the seller maybe thinks this is a good time to step out, and then you'll be able to benefit from that. Plus, the seller wouldn't have to get a selling agent involved and so on. So yeah, definitely get some advice beforehand. We're happy to chat with you. Yeah.
Perfect. Cool. All right. Then Cesar, can you tell us a little bit about the difference between a mortgage for occupancy and a mortgage for renting, buy-to-let mortgage?
Yeah, sure. Quick overview. An owner-occupied mortgage or residential mortgage can borrow up to 100% of the property's value, as long as your income is sufficient. Interest rates, just to give you an example, the lowest interest rate that we can currently get for 10 years is 1.39. So that's fixed for 10 years. Looking at buy-to-let mortgage, you can borrow up to around 2/3 of the property's value. So you need to pay down 1/3. And interest rates are around 2.5, between 2.5 and 3%, depending on the type of product that you're looking for. Another difference is the way the bank approaches an application. That difference is, so for a residential mortgage, the bank is going to look at who are you, where's the client from, who is the client, what did they do before, et cetera, what's their marital status. Then they look at your financial position, income, any obligations that you have, assets, debts, and last but not least, the property itself. How is it maintained? What is the value? What does the building insurance look like? All of those types of details. When it comes to buy-to-let mortgage, it's the other way around. So first, the bank is going to look at what does the property look like? What is the expected rental income? How is it maintained? All those details. Then they look at your financial position, and then finally they look at who you are and if they want to do business with you.
Okay. All right. Then I have a question for Kimo. A question from Michael. Michael asks, we recently saw an apartment in Amsterdam, but the selling agent was insisting that it's them who prepare the purchase contract, not the notary. The agent was from Permanent. Is it the reason that they can't do it, or is this something with a red flag?
So that has to do with the location of the agent, most likely, right? So the agent's from Permanent, and I think to give you the reason why he might suggest that is because a notary might take a little bit more time, and the seller will only have security that the buyer is going to move forward when that purchase contract is signed and the cool-off period is ended, right? So the selling agent will try to push for you to sign that purchase contract, push back a little bit and say, okay, hey, no, I want to do my due diligence and I want to make sure that I understand the contract. But we often get pissed off selling agents who are like, when is your client signing? When is your client signing? We're like, hey, whoa, slow down, right? Like they saw the property once, they submitted a really good offer, and this is probably the biggest investment they're going to make in years. So why rush this thing, right? They're very secure, they're in love with the property. So please give us a few days to do everything, right? So that's probably why he's suggesting to do the purchase contract himself. If he's in Amsterdam, located in Amsterdam, then notaries will do it. But if he's located in Permanent, he'll try to actually do it himself.
Yeah,
I would still opt for a notary though.
Yeah, it's going to cost you a little bit, but I think you'll get more security, for sure.
Yeah.
Do that after your offer gets accepted.
That's one thing for sure.
Yeah.
All right, question from Natalia for you, Cesar. Is it actually possible to get a higher amount of money from the bank than the calculator shows? If yes, how much?
Okay, got it. Sorry, it depends a bit on what the input was.
So she actually says the bank calculator says she can get around 300K, and she also says, is it possible to get something closer to 500, for example, if my monthly payment would be the same as rent in this case?
No. So how a bank calculates how much you can borrow is they look at your income, they look at how much you can spend, and based on how much you can spend, you can borrow X amount. Looking at online calculators, it really depends on the input. It really depends on the components that your income has. I'll give you an example. Let's say you have a bonus every year. Some banks will use that bonus, others will not use it or only use it partially. So it really depends on the input to see, to find out how much you can borrow. The easiest way to find out how much you can borrow is by contacting us.
Yeah.
We can calculate it, no strings attached, and you'll know exactly what you can do.
Perfect. Then I have a follow-up question from Natalia. She says, I'm a single parent, and well, living on a single income makes it a bit more difficult to buy a property suitable for a family. Do banks take such things into account? As she says, I would rather prefer to spend the money and I'm paying for rent on a mortgage, but my income does not qualify for the amount needed for a decent 2-bedroom apartment in Amsterdam.
Yeah, yeah, that is a difficult one. No, there are no different. Your situation does not have any impact on how much you can borrow, but I can imagine it's difficult. And this is a bit silly for me to say, but then the only way to still buy the home you want to buy is look a bit further than only Amsterdam, for example, or only the big cities. Yeah,
right.
so that the budget matches the home that you want to buy. Yeah.
Okay. All right. Then maybe a good question for you, Kimo. A question from Alfia. Can a foreigner, so a non-Dutch resident, actually buy a property?
Can a foreigner, a non-Dutch resident, buy a property? Yes, you can. Getting a mortgage while not living in the Netherlands is a little bit trickier because you need a BSN, social security number, to actually, or do you have an address in the Netherlands to get a mortgage? But if you buy with foreign money, yes, you can do that. But the the inspections or the checks on where the money comes from are a little bit more severe because they don't want any kind of like fraudulent or unlawful, illegal money coming into the country. So that will be checked at the door. Either way, if you're purchasing a property and you spend more than 10,000 euros out of pocket, you'll get some of these questions to prevent from money laundering or fraud. But in case you buy with your full amount, we've actually helped a client now twice who had funds from abroad, who was living abroad, who wanted to buy in the Netherlands, and we helped them throughout the process. But again, the vetting process is a little bit more thorough.
Yeah. Okay. All right. Then back to you, Cesar, from a question from Jose. Can be interpreted, I think, in two ways. Her question goes, how is the process of selling the first house I bought and buying the second one? Can I use the money I get from the first sale directly? As in, I guess she's renting it out and maybe using her income from her rent to buy a second property, or as possibly selling the first property and then buying the new property in this case.
Yeah, so moving homes. So I'll give you an example. I think, by the way, it's Jose.
I'm sorry. I thought I'm going to go full Dutch on this one.
So an example, maybe Jose bought an apartment on his own. He got to know someone and wants to buy a bigger place together. Then when you sell your home, you are able to use that money on the second home. What's good to know from a tax perspective, there are a couple of implications on the gains that you have from selling your home. You don't have to pay capital gains tax, but you have it has an impact on the mortgage interest deduction. And I won't go into detail during the webinar. As Kimo mentioned earlier, it's a seller's market, so it's easier to buy a new one so buy a new home, get a mortgage on that, and then sell your current home. And then what you could do is use a bridging loan if you need that to buy the home you want to buy. And I think I didn't get the buy-to-let part of it, Ludo.
Well, I think that was just an assumption I made. But if you still have your current property, if you want to buy a second property, can you use the income that you're receiving from the first property that you have via rent to buy a second property?
It depends on the bank and what is in their policy and how much of that rental income you can use. They also look at how much you're paying on the mortgage that you have. So it is a bit more complicated, but yeah, if needed, we can always find a solution. Yeah,
exactly. Okay, cool. And then I have a question that I think, well, two questions actually, one for Kimo, one for Cesar. I'll start with you, Kimo. Michael saw a nice apartment which was not part of a VVE, but it was a lidmaatschapsrecht. Could you explain what this is and should it be avoided?
So I think that I have to explain a little bit about VVE and lidmaatschap before I do. So VVE is an association of owners. And what happens when you buy a home in a VVE? You buy a home, but you don't buy the actual house. You buy into the VVE, and you'll get the exclusive right to use that home. A lidmaatschap doesn't necessarily change that much from the VVE because you have to become a member of something, and you'll get an exclusive right to use something. But it's a little bit more, how you say, it's a little bit more equalized in that sense. But I wouldn't necessarily shy away from it. I would read the house rules and bylaws carefully. Technically, when it comes to VVE, it's all arranged for in a general terms and conditions, which are set in specific days. When it comes to a lidmaatschap, it's a little bit more specific because you don't find them very, very often. But have a read carefully through it. I wouldn't shy away from it at all. I think it's fair, but it's just a different way of structuring ownership in a building or a group of owners.
Okay. All right.
Is there anything from a mortgage perspective?
Yeah. So the
sorry.
Oh yeah. Well, the question that it was attached to it. How does a umbrella mortgage work in this case, and can a mortgage advisor help with it?
Yeah. So it does mean yes, a mortgage advisor can help you with it. A downside of having these types of constructions is that you cannot shop for a mortgage, and you cannot shop for a mortgage with the best rate. So it's a bit more, it has a bit more implications on your finances, and then maybe you will not have the best solution that is out there. So that's the impact.
Okay.
And not every bank allows you to get this type of product.
Okay. All right. Cool. Then back to you, Kimo. I think you were talking about well, rental properties, etc. Tim asks, and he might have misunderstood or understood correctly. Did you just say that I effectively cannot buy an apartment in Amsterdam as a rental property?
So you cannot buy a property as a rental property. I'm not sure if I understood you correctly. You can buy a property, and if you want to rent it out, you can do that, but you have to get a specific mortgage. If you're currently renting a property and you want to buy it from the owner, you can try that as well. So I don't necessarily understand the question. You can also buy a property with a tenant in it, but again, you'd have to use a specific mortgage for that. So yeah.
this person is living in Berlin at the moment, and I think from the way he formulates the question, he's planning to stay in Berlin. So he's
That's fine. That's fine, but you can't get a mortgage in the Netherlands then. So
Yeah,
you can
okay.
buy a property, but you have to do it out of pocket.
Cool. Nice. All right, then a question from Fernanda. I think question for both of you. I'm going to ask Cesar in this case. If you want to fill Kimo, please do so. If you've just arrived in the Netherlands, are there any downsides for buying? Are there any rules that are beneficial for people that have been living in the Netherlands longer?
On the latter, no. You have the exact same rules and regulations as everybody else has. Only thing is that not all banks will accept a mortgage application. Why is that? Because again, we need to sell your case. We need to tell them that you're going to live here for a long time. If you've only been here for, let's say, a week, and you're already buying a home, then it could be difficult to convince a bank. And to make it even a bit more bold, some banks have it in their policy that you need to live in the Netherlands for at least 6 months or 1 year or 3 years. So that could make it a bit more difficult. However, it does not mean that there are no possibilities, because there are still banks who are open to you buying a home as soon as you land. I'll give you an example. Let's say you are moving to the Netherlands with your family. Then it could be a good idea to buy a home, because then your kids don't have to move twice or even multiple times. So then it could be a good idea to buy a home directly. So yeah, depends a bit on what your situation is and what your goals are.
Yeah, maybe from a process point of view, buying a home, again, like what we said, it's not about timing the market, it's about timing the market. So you want to actually have a home for a consecutive number of years. And buying fresh off the boat means that you might not have a good feel for the actual area, for the kind of like the dynamics within the city. So please properly do your homework then, and maybe spend a few days before you arrive, like scouring the city, trying to understand a little bit, ask friends, family that maybe are already living here, what a good area to buy is for you, because it's based on, of course, your requirements. So do your due diligence carefully. Otherwise, well, you might get lucky and buy your dream home in a dream area, but you might also buy a dream home in a shitty area, or buy a shitty home in a dream area, or buy a shitty home in a shitty area, and you don't want that. So make sure you do your due diligence, research the city, neighborhoods, and so on.
Yeah. Okay. All right. Then a question from you, Cesar. The question goes as follows: is it possible to get a loan for the fees together with the mortgage? Or is it just the purchase price that you can receive? Or sorry, not the purchase price, the market value price, of course.
You can get a 100% loan on the property's value. If it's a personal loan, a consumer loan, it is, or a mortgage, it is 100%. So you cannot borrow any extras for the fees or.
No. Yeah. So those need to come from cash.
Yeah.
All right. Then a question from you, for you, Kimo. A question from Andrea. You already explained a little bit how we define the market value of a property. Is the WOZ value a decent indication, or at least a way to compare two different properties?
Yes and no. I have a really good story to tell. So when I moved to Amsterdam a couple of years afterwards, I wanted to buy a home with my partner back then, and I actually talked to a friendly real estate agent who was living in the hometown that I came from, and he was like, "Look at the WOZ value and just base your offer on the WOZ value." We did that. We got a very, 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 very feisty email back from the seller, because in areas where the value increases by percentages that are higher than 1% on an annual basis, which is currently a lot of the areas in the Netherlands at the moment, the WOZ value is not a really good indicator, because it's always old data and it's not very specific for the property, right? They use big data and they apply certain calculations based on what's being sold in the neighborhood, name it, and they'll apply it to the amount of square meters and the type of property that you have. Sometimes the information in the records of the municipality is not 100%, so there might be a few square meter differences. Sometimes you have renovated the property and they don't take that into account. Often they use data that's a year and a half old, so you can already see that the correction there is different, right? In areas where prices have not increased that much, the WSN value is a little bit more an accurate indicator of what the value could be of your property. But again, always double check it, because sometimes they're off, sometimes it's too high, sometimes it's too low. Don't fully trust it, right? Always double check it by doing the research on the market value. But I think it's a good question.
Okay, all right. Then a question from Lena for you, Cesar. Lena asks, if you're leaving the country and inform the bank that you are going to rent out your property, does that result in the bank raising the interest?
Yes.
Darn it.
So if you get permission, then indeed they will increase the interest rate. Yeah.
Okay.
Because the bank has a bigger risk.
Yeah, makes total sense. Then a question for you, Kimo, not from Jose, but from Jose. Is it a good idea to buy a new build instead of a existing build?
It's a question we get asked often. It depends a little bit on what your preference is, of course. What kind of home do you prefer to live in? Is it a completely renovated new type of home, or is it kind of like a maybe more characteristic home in an area that is a little more old-fashioned? So that's of course the first thing that you want to figure out. The ups to buying, or the pros to buying a new build, is of course quality. So you'll have a high energy label most likely, and the quality of construction will be good compared to properties that have been built 20, 50, 100 years ago. The second thing is that you might still be able to influence some of the level of finishing, but please double check that to what extent it's been set and what influence you can have on it. And we're really talking about like detailed levels, right? Sometimes you can decide yourself where the power sockets can be, but sometimes it costs $100 per power socket. So double check that. Most often you'll be able to influence maybe the bathroom or the kitchen and stuff like that, but double check that. The other upside is that most likely you'll have a concrete construction, which means no nuisance from the neighbors. Sometimes you'll have car parking, stuff like that. But the downsides to buying a new build are that, well, you can't live in it yet because it's not completed yet. That means that you're buying something, but you're also renting something while it's being constructed. Well, while you pay off the new property, because that happens in phases, you actually have mortgage costs. So that's one downside. The other downside is that you never know what it's exactly going to look like, feel like, whereas a property you can actually visit and view is something that you can feel. I forgot about one of the upsides, by the way. So let's say you're 35 or older, or the property is more than 400,000 euros, then you don't pay any transfer tax on the new build. Again, that compared to maybe the cost that you have for a mortgage while you're renting a place is something to look into. The guys from Mr. Mortgage can definitely help you with that. Any other downsides? Depends on where you buy. Sometimes there's like ground lease, so you don't own the ground, so the ground lease can be quite high. We see that in the capital and some other areas where the ground lease is quite substantial. So have a look into that, and yeah, double check what the procedure is of actually securing the property, because it's also very difficult to do price comparisons with properties like this, right? Because it's new and it has different characteristics, and it takes a little bit more time to do that. But yeah, it could definitely be a good buy if you're into something like that. If you like living there, maybe you'll have a great view. You'll have amenities in the building that are awesome, like a gym or a parking garage, something like that. So definitely, it's worth looking into.
Cool. All right. And can you tell us a little bit about properties that are under construction? Maybe that's a nice little hook onto what you previously
properties
said.
They're under construction.
Does it make sense to buy properties who are under construction?
So I'm not sure
say.
I'm not sure, like if it's under construction, it's not finished yet, right? So a new build, I kind of consider new builds properties that are still need to be finished, right? If you buy a new build that's owned by by a seller, it's no different than a property from a seller, from another seller, right? So you can actually access the property and so on. So this is where we make the clear distinction. New build, we call it properties that are still to be finished, or if it's just finished, but then you'll have access to it. Maybe another distinction is a renovated property. That's an old-fashioned property that's renovated, that's really like brought up to high end. It's definitely interesting to look at that, but also look at the quality of it, right? Because nowadays these contractors, they know how to deal with kind of like making something look really pretty cosmetically, bumping up the price like crazy, and it turns out that the level of construction, the quality is not that good. So please double, triple check that. And I would advise to get technical inspector in there, because they'll be able to easily be able to snap that little bubble that the selling party has so happily brought up.
Okay, all right. Then we'll move back to you, Cesar. A question from an anonymous attendee. If I work for a particular bank, can I actually get better interest rates from that bank where I work, or does it not matter at all?
It could be. However, it will not be that much. Maximum you could get potentially is 0.1 on the interest rate that a bank offers. It could also mean that when we look around in the market, then we could still get a better interest rate at another bank. So yeah, but it could be. It really depends on the bank.
Okay, all right. Cool. Then, well, back to you, Kimo. Question from Vivian. We were just talking about how if it's possible to actually buy a property without being a Dutch resident. But does Vivian need a resident permit to buy a property if her spouse is already a Dutch citizen?
Does she need a Dutch resident permit to buy a property if her spouse is a Dutch citizen? So it depends a little bit on who buys the house, right? But technically, you don't need a residence permit. If your partner is Dutch, you can technically buy a house. I'm not sure from a mortgage perspective if you need a residence permit. I think that you need a visa to be in the country. You need to have a Dutch address and a BSN, but the residence permit is maybe taking it a step too far. I think, yeah, we're happy for you to invest in this country if you live in it and you're legal. But a residence permit is not necessary.
It depends a bit on where Vivian is from. Yeah.
Okay. All right. Cool. Kimo, can you tell us a little bit about the difference between a independent house, a row house, apartment, and how someone can determine what is best for them?
Yeah, of course. Yeah. No, I think again, let's start off with what works best for you and for your household, right? I think and also think a bit about family planning and just looking to the future. Because that might have an impact. Again, I would have loved to have a garden. Looking back, I maybe should have spent a little more time viewing proven properties and went for that place with a garden. So have a look at that first, because the upsides and downsides. Let's start off with the apartment, and then we'll move on to the next parts. Apartments, you're buying most likely into an owner association. You'll have neighbors next to you, both sides, up, above you, and most likely down below you. So yeah, those are things to take into account. You'll most likely not have a garden. You'll have maybe a little balcony, and it depends on the quality of the build and so on. But those are several things to think about. Also think about, for example, elevators, especially if you maybe have some older parents, or if you have kids again, or name it, storage space, stuff like that. If you buy a row house or a freestanding house, most likely you'll have a front garden, little back garden, maybe a little shed. You'll have multiple rooms. Apartments, of course, depending on where you buy, of course, require maybe a little bit less maintenance, because you buy a monthly, or you pay a monthly service amount into the homeowner association pot, and they take care of the majority of the maintenance of the building. If you buy a row house or a freestanding house, then you're responsible for your own property. So incidentally, you might have to fix things on the roof or foundation or the walls or the frames and stuff like that. Whereas in a apartment house, that's not the case. The difference between freestanding and a row house, well, freestanding is kind of clear. You don't have any neighbors. It can also be a little bit more expensive because you'll buy a plot of land. Depends on where you buy. Maybe my next house will be a freestanding house somewhere with a little bit of ground around it. What else is good to know from a purchase point of view? I think that when it comes to an apartment versus houses, double, triple check a house when it comes to the technical inspection and the quality of the build, because all the liability will be yours once you own it. So make sure that you double check that. With own association, again, the construct, the building, public areas are the VVE's responsibility. So you still need to double check, of course, the quality of the house itself, but it's more internally. Is there anything else? No, I think those are the majority of the most important things. So check if it's something you could live in, check if it's a good quality, and yeah.
Yeah, cool. All right. Then a question for you, Cesar. Is it actually a good idea to pay off my mortgage earlier if I can? And does the bank charge a pre-closure fee?
First one depends on the plans that you have, the goals that you have. If it's your goal to pay off your mortgage as soon as possible, then obviously it's a good idea. Obviously, you need to think about why that is a goal and etc. But looking at terms and conditions that products have, with every bank you can repay at least 10% of the original principal per year. So if you got a mortgage of 400K, it means that every year you can repay 40K without penalties, additional charges, fees. You can simply repay it and be done in 10 years. Some banks offer 15%, some banks offer 20%. So if that is an important feature, then when choosing the right bank for you, we obviously will set up the proposal including this specific feature.
Okay, all right, cool. Then from Mindy, question for you, Kimo. In terms of ground lease and VVE costs, are there ever any assurances about how much they will increase over time? Or are they, for example, capped or aligned with inflation or anything?
Sorry, I got distracted by the name. Whenever I hear the name Mindy, I have to think, because my daughter loves Mindy, not just a Mindy, but a mega Mindy. Yeah. So I'll tell her that Mindy asked me a question tonight. Could you repeat that question, Ludo?
I can definitely repeat that question. So Minnie asks, in terms of ground lease and VVE costs, are there ever any assurances about how much they will increase over time? So are they, for example, capped or aligned with inflation or anything like that?
Yeah, good question, Mindy. I think that let's take the VVE service fees first. That's what you pay into the own association pot, and what it's for saving money, of course, for maintenance, is for paying off things like insurance, maybe light in the public areas, cleaners, concierge, stuff like that. That, of course, is based on what the costs are of all these things, right? And that's, of course, linked to inflation. So most likely you'll see that the VVE service fees are increased by inflation. If it turns out that there's more money needed to do renovation, then it's the VVE who decides what happens, right? Either they up the monthly service fees or they transfer a substantial amount into the owner association pot at once. It depends a little bit, but most likely if it's a healthy owner association, they have a maintenance plan, so they'll know what they would need to save for the next years. So you won't see any crazy amounts, but who knows, something might happen, right? Like if there's a big storm, then it might mean a little bit more money. And if it's a good year and you save more money than you think, then you should be fine. The ground lease is a little bit different, right? Because the ground lease is based on several factors. And most often what you'll see is that the ground lease is for a specific period, for a period of 50 years. So let's take ground lease that was set in 2009 and it's valid in 2059. We actually had a case last week where that was the case. There's several options. One option that you'll encounter is that it's been paid off for that whole period. Then you don't have to pay any ground lease for that whole period, and the new amount will be defined after that period. What it will be defined by the value of the ground and certain other criteria. So then it can increase by quite a lot, right? Because you don't have anything, and by then it will increase by a lot. Sometimes it's paid off for a shorter term. The same thing applies. When that term expires and it's still within the the ground lease period, you might have to pay. But if you pay ground lease consecutively already, then it will increase based on the cost price index. After the ground lease term expires, so a new term applies, then they'll look at the value again and reassess. Some properties, especially in the Amsterdam municipality area, have received a preferential offer or good offer from the municipality in 2019 if they've still applied for it. Some might still be benefiting from it. And then that means that you can either buy off the ground lease for a good amount, or you get it discounted, or it's been set. So have a look at the ground lease terms. But yeah, they can definitely increase by a little bit more than inflation once that term expires. During the period when you pay, they'll increase by inflation. And yeah, just have a look at the actual specifics of the ground lease period.
Okay, cool. All right. Very clarifying. Thank you. Then a question from anonymous attendee. This one's for you, Cesar. The lowest interest rate is 1.39% for 10 years, is what you said.
Mm-hmm.
Why do mortgage calculators always base their results on 10 years period, even when the repayment period will be longer?
Because the 10 years interest rate is the most chosen and the most popular interest rate. Why is that? People move homes every 7 years on average. If you fix your interest rate for, let's say, 20 or 30 years, you're going to pay a premium because you're buying security. Your security means that the bank has less security, and therefore they charge you a premium. If you have in your mind that you're only going to live there for, let's take the average for 7 years, then indeed, why would you use the interest rate of 20 years? Looking at shorter interest rates, usually the difference between, for example, 5 years and 10 years is not that much. It will, for example, be 0.05. And that is, yeah, so that's why the 10 years fixed rate is the most chosen one. And therefore, all the calculators have that same interest rate.
Makes sense. All right. Cool. Well, we just came down to our last question. Question from Vinaj. Again, please excuse my pronunciation. I'm going to go for you, Kimo. How much money should I actually have minimum in hand? Should 15% be enough?
To buy a property. So I think that you want to distinguish the closing fees and maybe some money if you want to overbid over the value. Closing fees, depending, of course, if you are eligible for the transfer tax exemption, so if you have to pay it or not. If you don't have to pay the transfer tax, then I would take into account 2 to 3% of the purchase price. If you do have to pay the transfer tax, then I would say 4 to 5. But it really depends on the amount, of course, because some of the costs are fixed fees. So the lower the value of the property or the purchase price, the higher the kind of like ratio will be. But that's what I would take into account as closing fee savings. And then you have, of course, maybe some money that you want to put up towards the property. But don't forget what else you might do with that money. Maybe you want to redecorate a little bit. Maybe you want to buy furniture. So have a careful think about what you want to do with that money. Just putting up towards the property might leave you empty-handed, and then you have a property, but then once you live in it, you might want to fix all these things and do all these things. So please try to plan it carefully. I think it's, what is it? It's May. So it means that I think holiday pay is coming up. So maybe you'll have a little bit more to spend towards the painting or those lovely curtains. But 15%, I think it's a fair amount. But yeah, it depends a little bit where you buy, how competitive it is, and what your plans are.
Cool. Well, every time that I say we have the last question, there's always someone who wants to add another question, and I totally understand. It's the anonymous attendee for Cesar. Is it possible to buy on a variable interest rate?
Yeah, exactly. Yes, it is possible. So you can choose anything between a variable interest rate that changes every month up to fixing it for 30 years and anything in between. However, this is a bit of a technical story. So currently we have an inverse yield curve. So It means that when you look at the variable interest rate, that interest rate is higher currently than, for example, the 5 years fixed rate. So from that perspective, it doesn't make a lot of sense. However, if you have a certain view, if you have a glass bowl and you are a magician and you can predict the future, then it could make sense to choose the variable interest rate.
Cool. All right. That was it.
Perfect. Thanks a lot, Ludo. You managed to make the Q&A super balanced, and I saw that you already answered some of the questions in the Q&A as well, so great job there. Sergio, thanks a lot for honoring us with your presence and sharing a lot about finance and mortgages. Thanks everyone for attending. We hope to have answered all of your questions. I see maybe one pop up in the Q&A.
It was a thank you, so it's
it was a thank you. Have a lovely evening. You know where to find us. If you have any further questions, just book in a free intake. We'll be there waiting for you guys and ready to support. It's a crazy world out there, so make sure you get someone to support you. For now, have a lovely evening, and we hope to see you in the future. Take care and be well.